Show it is 2 o'clock. So welcome back to our conference. My name is Elizabeth Woodward. I am in the Lexington office of Dean Dorton. I've been with the firm for since 2000, so that's 23 years. I was a financial statement auditor with KPMG for 6 years before I came to the firm. One of my favorite things to do as a financial statement audit was student financial aid audits. I absolutely loved the compliance part of it. And I also was able to work on financial statement audits of several colleges and universities. But today I'm here as a certified fraud examiner. I am, as the slide says, a director in our forensic accounting group. So forensic accounting kind of refers to any work which is ultimately going to wind up potentially in front of a trier of fact, a judge or jury. I do a lot of expert witness testimony, but today talking about fraud, our group does do fraud investigations that do sometimes wind up in court. So our objectives for the afternoon are to review some recent fraud statistics on occupational fraud. And I tried where possible to focus obviously on those that impact higher education. We're going to review types of employee corruption. We're going to introduce a business fraud risk framework. That's a new tool by the AICPA that I was on the committee that helped develop it. And then at the end, we will talk about some case studies. For those of you, I know there's a lot of Dean Dorton alum online, and so hello to you. And you know that when I teach internally, I always tell Dean Dorton employees that I want you to walk away with two things from the session. That is my goal. For our clients and friends, my ask for you is that you walk away with one thing at the end of this 50 minutes. One thing that you'll think about differently. You'll look at your segregation of duties or something, just some way that you do your job. I think if you can learn that, then I will feel like I have done my job this afternoon. Okay, so first we're going to start off reviewing some recent statistics from this ACFE report to the nations. And you're very likely familiar with this study. It's pretty widely used by fraud examiners to teach about fraud detection and prevention. This report when it started in 1996, it was called Report to the Nation, and it focused on the United States. A handful of years ago, it became an international study, and so now it's plural, a report to the nations. The study is done every 2 years. I've been looking at it since 1996 when it came out. We look for trends. We see a lot of commonalities. A lot doesn't change year after year. Fraudsters really don't change that much, but certain things do, and we'll point those out as we go through. So this year, the study was on 2,000 cases approximately in 133 countries in 23 different industries, so pretty broad. The goal, as I mentioned, is to help fraud examiners prevent, detect, and respond to fraud by education. The ACFE estimates that organizations like yours lose 5% of revenue every year to fraud. So that's one point today. I'm just going to pause. Think about your annual revenue and think that on average, you're going to lose 5% of that to fraud. You may just not know it. In this particular study, the median loss per case was $117,000. The average loss per case was 1.8 million. That's very different. Average 1.8, median $117,000. Now, I know you don't want either one of those numbers next to your name and having a loss incurred. I assume that average is so high because there's probably some very, very large ones driving it up. Because as just remember from your college classes, median is right in the center. So if there's 20 numbers to this side of it and 20 to that side, 117 is right in the middle, but the average is 1.8. One thing that really has not changed, and I personally find this very humbling, but for you, you should find this very important because it's really what you should focus on when you're thinking about preventing fraud and detecting it. And that is 42% of cases are caught via tips. So the first time I read that, I was really upset because I thought, here I am, I've learned all these special techniques to catch fraud, and you're telling me that tips are what normally lead to it, or most often. And I think what I have seen in practice over the last 23 years is it is often hard work that is done by a company to make it a culture in which tips can be detected. We do have examples at our firm where we'll have a financial audit team, out in the field doing a financial statement audit, and then a tip on fraud comes to management. Now, in this study, that would count as a tip. But what we know is we had financial statement auditors in the field, and that probably, someone got nervous about something and went ahead and reported it before it was caught. Also, that would be kudos to the management person that got that tip because they had provided a safe environment for the phone to ring. So in terms of what you can do, we have had a lot of success helping colleges and universities with fraud tip lines. They're very affordable. Tip lines if fraud occurs, if a company had a hotline, the median loss is $100,000. If they didn't have a hotline, $200,000, so double. The reason is the duration. If you have a hotline, typically a fraud is caught in 12 months versus 18 months without a hotline. So that's worth the effort. Okay, so we're going to talk this afternoon about occupational fraud. Definition of occupational fraud is any fraud that occurs within an organization in which at least one of the perpetrators is an employee or an agent of the organization. There's 3 different types on this slide. The one on the top is asset misappropriation. That's a fraud scheme in which an employee steals or misuses the organization's resources. So that would be like if they steal cash, if there's a false billing scheme, or an inflated expense report, which is very common and very easy to do. You can see from this slide that 86% of occupational fraud is asset misappropriation, and the median loss is $100,000. Corruption is 50% of the cases, and it's $150,000, so a little bit more expensive of a median loss. That is a fraud scheme in which an employee misuses their influence in a business transaction in a way that violates their duty to the employer in order to gain a direct or indirect benefit. So some examples in your industry of corruption would be if you had a student financial aid officer accepting cash or gifts or kickbacks for recommending certain lenders for loans. IT officials might recommend certain equipment and they might be getting kickbacks or receive gifts. Financial statement fraud is the third on the bottom here. It's 9%, so much less likely to happen, but look at the very, very significant dollar impact. Financial statement fraud, while it occurs least often, is the most expensive to your organization. This is a scheme in which an employee has intentionally caused a misstatement or an omission of material information on your financial reports. So this could be understating reported expenses or artificially inflating reported assets. Could be fictitious revenue or manipulating expenses to meet certain funding metrics or requirements. So always, when you're thinking about fraud in your organization, always think about what matters and what people are being measured by, because that may be what is manipulated. So you may have noticed, and I'm surprised no one yelled out at me, that those numbers on the previous page added up to more than 100%. Okay, yes, I see CPA heads rolling up and down. Thank you. I'm glad you're paying attention. The reason that slide added up to more than 100%, those occurrences, is very often fraudsters commit fraud in more than one way. And that's why fraud examiners talk so much about your culture, because when fraud is occurring one way, it very likely occurs in other spots as well. So in this slide up there now, you can see that if there's more than one dot, then that is the instances in which fraudsters perpetrated 2 different types. So for this 32% of cases were asset misappropriation and corruption both. So we have that. Down here at 5%, we have corruption, asset misappropriation, and financial statement fraud. And then you have the one below that, asset misappropriation and financial statement fraud. And at the very bottom, very least, is corruption and financial statement fraud. So how long do different fraud schemes last? I told you earlier that, one of our biggest goals is to catch fraud as quickly as possible because it keeps the dollar impact down. It also doesn't harm your culture as much, hopefully. So this chart shows the duration of certain types of schemes. You can see, I guess it's probably the top half of the chart is all 18 months. So that's billing, check and payment tampering, expense reimbursements, financial statement fraud, and payroll are all at 18 months. And then down at the bottom, you have registered disbursements and non-cash fraud and corruption at 12 months and cash on hand. Cash on hand has been going down over the years, as you would imagine. So how does occupational fraud affect organizations in different industries? So education is, let me show you, I know that's hard to read. It's 56,000 it's on the top row here, right there. So it's $56,000 is the median loss in the cases that were reported in this 2-year period. And there were 69 of the 2,000 cases were in your industry. This chart shows the most common occupational fraud schemes in various industries. So your education is down right here, third from the bottom. And from left to right, billing schemes. Billing schemes are where a person causes the employer to issue payment on invoices that were false. So that could be, and we'll see when you hear case studies at the end, an example where a shell company was created and disbursements were made to that shell company. And that's how the person stole from their organization. Cash on hand misappropriations are when a fraudster misappropriates cash. That would be like stealing from a vault or a cash register or something like that. Check or payment tampering is when you steal an employer's funds by intercepting, forging, or altering a check or an electronic payment. So this would be, you could have an employee steal a bank check and fill it, or blank check and fill it out, make it out to themselves, or they could reroute an outgoing payment, which we see with increased frequency, and it's deposited instead of in a vendor's account in their account. Corruption, we've already mentioned, that's when an employee misuses their influence in a business transaction in a way that violates their duty to the employer. And that's obviously for them to gain something that might be bribery or a conflict of interest is an example of corruption. Expense reimbursement schemes are obviously when an employee manipulates their expense report, inflates travel, et cetera. And we'll hear several examples of that later when we do our case studies. It's pretty easy to do, unfortunately. Financial statement fraud is when an employee intentionally causes misstatement or omission of material information from financial report. Non-cash misappropriations is just what it sounds like. It's stealing something besides cash, like inventory from a warehouse or something like that. Payroll scheme is dispersing money to like a ghost employee. So that could be to a totally imaginary person, or it could be inflating hours worked to a real person. It could be, if more than one person is involved, it could be a real person, but they just don't work and they just, they work for the university, they get the money and then maybe split it with the employee. Registered disbursements we'll skip over. Skimming is when an incoming payment is stolen from an organization before it's recorded on the books. So this would be one of my very first fraud investigations was a skimming situation where a plant manager was accepting payments in cash. It was interestingly from a vendor who only dealt in cash. He was Amish and didn't have a bank account. And so the plant manager would deliver product to the customer and get the cash and then make the deposit on his way home because, he told the employees it was convenient. And then he would come in the middle of the night and process a credit memo on the receivable to get it off the books. And that was caught by a tip because the employee whose computer he was using, when I went down to do my walkthrough, she had a Post-it on the side of her computer with her password, with her sign in and her password for all to see. And so he was literally, I couldn't make this stuff up. It has to be true, right? So he would come in literally in the middle of the night or on the weekend when no one was in the office, get into the accounts receivable and process a credit memo to get it off the books. And he did, as often as the case, he had a prescription drug problem, sadly, and was using the money to feed his addiction. So, And she's the one that called in the tip because she was an accounts receivable clerk, single mom, needed her job, weren't a lot of employers in her town, and she was afraid if she didn't report him that she would be held responsible for this. So, okay, some different types of employee corruption. All right, these next few slides are from a publication that I helped write. I do a lot of volunteer work with the AICPA, and their fraud task force quarterly publishes a document called Eye on Fraud. And so this particular edition is titled, it deals with employee corruption. So I picked it out to discuss today with you all. No discussion on fraud would be complete if you didn't get to look at the fraud triangle. I know it makes everybody happy. They have tried, you may have been in presentations recently where different fraud examiners are trying, different speakers are trying to turn this into like a pentagon and all these different size adds to it, whatever. I still like the good old triangle. I think it is simple to remember. Our experience is it absolutely is true. And what the point of this slide is that for a fraud to occur, all three of these components have to be present. So the fraudster they have to be able to rationalize it, which that's something that's independent to them. They have to have pressure. So that could be a financial pressure. It could be pressure to keep a job, meet a certain metric. Could be, the pressure could be covering up an addiction of self or a spouse or child. The thing that you as an employer can focus on is opportunity, because that's your internal controls. That's where they can't steal because they would be caught if they did. Some examples of employee corruption: payroll and ghost employees. This is where they receive paychecks, but they don't exist. So how you're going to catch this is, for this fraud to occur, employment files have to be created and work records typically have to be manipulated or falsified. Billing and fictitious vendors. This is issuing disbursements to fictitious vendors or issuing them to legitimate vendors for fictitious goods and services. Payments are often diverted to go to the fraudster. One way we look for this, it's very simple. Excel is still one of our greatest investigative tools. We will put employee addresses in Excel, and we will put vendor addresses in Excel, and we will look for commonalities and can catch fraud that way. And you could do that yourself maybe. Expense reimbursements. This is absolutely one of the most prevalent forms of corruption because it's relatively easy to commit. I will tell you, my opinion is anytime you have a bad culture, you're probably going to have expense report abuse. And it's really painful to investigate these to see what people do. They'll submit personal expenses, like I take my husband to dinner and I push it through like I took a client to dinner. Or overstating things on receipts, filling in blanks differently. Like if you leave a tip and you inflate the tip. I know these are small amounts, but they can add up over time. I did think of one potential fraud that used to really bother me 23 years ago. And I think technology has finally made it not really possible. And that is, used to be when you would take a cab from the airport, they would give you a blank slip that you could just fill out however you wanted to. And sometimes they'd give you 2 or 3. And I think they thought they'd get a bigger tip if they gave you 2 or 3 blank slips to turn into your employer. But now the way they do that, you give them your credit card and they email the receipt. So that's one fraud that has been corrected, I think. I'm not going to give you many more examples of those because we have them in our case studies later. Bid rigging is a little bit more complicated and typically involves more than one person, which is good and bad. If it involves more than one person, it is harder to catch. One way you can catch it is if one of the people starts to feel cheated and turns on the other to kind of blow up the scheme, if they start to feel shortchanged. Kickback is, usually in the form of cash or goods or services. We've seen examples of this, and it can be, I think, most expensive if the employee is involved with contractors. So we've seen examples of they hire contractors and then all of a sudden there's a barn built on their farm, and that's a Kentucky example. But where the contractor then bills a barn because they got work at the larger employer. Bribery obviously is the corrupt payment of money, gifts, or other rewards to influence action. So how does this happen and what can you do? One of the most effective controls is to conduct pre-employment screenings. So there's some things here that you can consider. You should probably always consult with an attorney just to know the local rules. But, you can do background checks that show criminal convictions. You definitely want to show those. You look for sex offender checks, financial credit checks, and drug screening. Now, I shouldn't have to say this, but I'm going to, because a few weeks ago, I was working with an organization that did pre-employment checks after the employee had already started. And so they were already there. They found the guy was a felon. And so then they had to, obviously let him go, but it kind of became a big thing because the board of directors had to get involved. So just make sure you do the checks first. And you should also have some policies in place for what is acceptable on a check. And if something is found and the organization is going to decide to hire the person anyway, I would recommend you have some appropriate oversight of that, like not just one person. More than one person should have to be involved in that decision, I think, to protect your organization. Failure of fraud victims to report theft. The reality is sometimes when a person is found guilty or caught, we realize they've done this before. And then maybe just it wasn't caught before because some organizations are hesitant to report it. They're embarrassed. They think it'll be a bad mark on their, on their reputation that this person worked for them. Lack of training in the corporate culture. This is just that people don't know what to do or what's right or what's wrong. There really should be no doubt at your organization about the appropriate use of funds. And there should be no doubt about how to report it if something is going on. Lack of internal controls surrounding accounting and procurement processes. I mean, most of you are CPAs, you all know what this is. The reality is many organizations cannot have internal controls the way they would be written about in a textbook because you just don't have enough employees. And that is what it is, but there's certain things you can do to mitigate the risk of employee corruption in those situations. And it might be having your auditor do some extra work. You obviously, if you're having a financial statement auditor and you're in charge, you always want to understand what the auditor is and is not doing to catch fraud. And then you might want to have some extra procedures if you think your internal controls, need some support. Okay, tone at the top. Organizations can fight corruption by establishing the proper tone at the top, educating employees on acceptable and unacceptable behavior, and providing ways for employees to report abuse. We've already talked about a hotline. So we suggest that you maintain a written code of ethics to make it clear that ethical behavior will not be tolerated. Provide regular mandatory anti-fraud training to educate your employees on the red flags of fraud. Employees are the boots on the ground and they're your best resource when it comes to detecting fraud. I will tell you, people really do know the difference in right and wrong. And most of them don't like it when wrong is done. And they don't like it when someone else is stealing. And so those people will report to you. The fraud hotlines that I have helped implement and at universities and colleges and universities, I think it's very effective to let everybody use it. And what I mean, sometimes clients will say, well, we only want, staff to be able to report things. I suggest let as many people report things as you can. I've been involved in implementations where students will report things. They may not be financial, but they may be cultural things that administration wants to deal with. And so successful implementations allow those claims to be made. Often when one's implemented, we see sometimes, right, we're doing it because the culture is one that the administration wants to change. We'll see a lot of claims at the beginning, and then they really slow down over time. And it's because matters got addressed, and that's what you want. You should formalize policies and require employees to acknowledge that they have read and understand the content. It should include a detailed conflict of interest policy and related party disclosure requirements. Your policies and how you run your organization need to make it clear that there is zero tolerance for fraud and that employees have a responsibility to report it. Annual reaffirmation of these policies should be mandatory with either a written or online signature to confirm that the employee has acknowledged it. And this really needs to be more than just a checked box, you know, try to make it interactive and something that people will pay attention to. You should require authorization and approval for expenses, including expense report and reimbursement. Your expense reports should be timely submitted so they can be properly reviewed. If you have an employee submit expense reports for an entire year at a time, now granted, we have a good control because most people don't want to wait that long for their money. But if they do want to wait that long, it's very hard to review something that far after a fact to make sure it's accurate. And you need to make sure it has proper support. We've already talked about ethics hotline. Okay. So business fraud framework, this is a tool that has been developed by the AICPA to talk about different types of fraud and give examples of them. So this business fraud risk framework, the colored blocks are different groups that can perpetuate a fraud or perpetrate a fraud. On this framework, each type of fraud in black could be committed by more than one. But when I was on the committee that helped develop this, and what we went through each one and kind of said, what group is most likely to commit fraud of this type, and where would it be most harmful to the organization? So for example, the yellow area is your board of directors. At the top of that is conflicts of interest. You know, we had some great discussion in the last session, Pfeiffer University, about they had a CFO in prison, which I wish they really had talked more about that embezzlement, because they really didn't share does anyone know what that embezzlement, the details of that? Not really. Okay. A lot of money or a lot of different things? A lot of money. He went to jail. So that typically is a sign that it was a lot of money. So you had a CFO embezzling and you had a board of directors. So I heard two things about the board of directors in that discussion that I thought were relevant. One, the president was supervising the CFO who stole, and the president reported to the board. So I think the implication was that there were some issues there. And then the fact that the board allowed for 2 years in a row to take 18% of the endowment rather than 4 or 5%. And I know with like at my church, I was on our endowment committee, and we always had that every year. We could take 4 or 5%, but that's it. And so that's kind of a known rule of thumb. And the fact that, you know, 2 years in a row, they would kind of make that unwise decision. I think we can imagine there's probably a lot of else going on there. So we kind of see at the board level, when you have these issues, it can really, really impact the organization and not in a good way. So suppliers, I'm going to skip the dark blue. That's customers, which I don't think really applies to higher education. Suppliers, I think out of that list, it starts with bid rigging at the top. I think that's at the top because it could be most material to your organization in terms of dollars. And as I said, often with bid rigging, there's more than one person involved. Yes. Oh, I'm like, what is she talking about? I don't see that on the chart.
$500,000 fraudulent invoices.
Okay, so we're going back to the Pfeiffer. Did they say embezzlement? They said embezzlement. They said he went to prison, and so he embezzled $500,000 on fraudulent invoices. So that is, he probably made up invoices and paid them, and they got diverted to his account, which is. Can I just say I love Google? This is awesome.
So he is currently in jail for 32 months. He pled guilty. He forged the signature in order to receive payment from the university on a fraudulent invoice. And the scheme took more than $525,000 and went on from January 2014 to September 2018. And he will spend 3 years in supervised release upon his release from prison and will be ordered to pay a restitution of almost $520,000.
How much?
Almost $520,000.
It'd be interesting if he has it. You know, because often the money isn't there. I mean, it's not, they can't find it.
I believe they did say he is out of jail now, though.
Right. So maybe.
But the money is still
525.
Unknown.
Yes. Yes, they did say he was out of jail now. So thank you. Well, thank you for the audience participation and providing that information. One of my all-time favorite fraud investigation stories was paying fraudulent invoices. And it had come, we were kind of into this investigation, and along the way we had focused the suspected employee. We were looking at him, and so we noticed where he had lived, and he and his wife had gotten separated and he had moved into an apartment. And so, you know, the way when we're doing investigations, we try to keep it at a story level in our head. And so I was, you know, thinking, okay, he got divorced, he moved into this apartment. It was in Lexington, Kentucky, where I live. So I knew where the apartment was. And then like 2 days later, we were in this conference room with attorneys. There were 3 or 4 of us. We were looking at the Secretary of State website at some different companies, and I saw the same address on this company as the apartment he had rented. And so we looked into that, and we were able to find that one of the frauds, that's the first fraud that we caught on him, is he had set up this shell company, and then he was mailing checks to a PO box that his friend was getting, and they were keeping the money. And like I said, this was just one way he was stealing money. He stole many ways. We wound up turning our investigation over to the FBI, and he also wound up going to jail. But I don't think the money was left, you know, to recover. So, okay. So we were talking about suppliers. We talked about bid rigging. Kickbacks are, you know, how the organization is going to be hurt with a kickback is you're probably paying too much for items because someone at your company is getting a kickback because of that. Employees are in green. So the items listed there, they start with bogus sales and bribery, check kiting or tampering, and collusion. And I think those are towards the top because of dollar impact to you. But expense report fraud would be included here, and I think can be, you can have a lot more instances of fraud. With expense report fraud, the dollar impact is not going to be as harmful to your organization. But I think there's so many more potential perpetrators of expense report fraud than in any of the others. Management, in the light blue, the biggest harm here, as I've already mentioned, I think, is the financial statement fraud, just in terms of materiality, because typically those frauds, much higher dollar impact. Also, the public image, if it gets out, if you have to recall financial statements. And I would think, you know, for colleges and universities, if you have issues with financial statements, then what issues are you going to have with federal money that you've taken, you know, you've accepted? Federal regulators can you get into trouble with? So examples of financial statement fraud are asset overvaluation, estimates or judgments, expense manipulation, improper capitalization of expenses, underreporting liabilities, manipulating returns and allowances, and then revenue manipulation and recognition. So in terms of different roles in business fraud risk management, the issue with management and why they can be so dangerous why frauds committed by management are a higher dollar amount is that they have the ability often to override internal controls. And so they're harder to catch. And they can distort or withhold information from the board, which can be harmful. Employees have access to computer systems and to assets. That's hard. Suppliers might take advantage of control weaknesses. And the board are the ultimate decision makers. The board is going to have access to confidential information. So they're the ones that'll be able to benefit from, known information and taking advantage of that, like buying property. We've seen examples of that. They know that a particular business is going to expand. They buy property, sell it, and benefit that way because they have privileged and confidential information. In terms of tips for practitioners, in terms of one to many, this is just thinking about how one fraud can hurt many. So obviously, like in financial aid fraud, if fraud occurs, it could divert assets from many students. So one instance could harm many people. That's that. Do we have any questions on any of this or anything? Okay. So I told you we would talk about some case studies. And I was really shocked how many there were, how many new ones. I mean, these are all relatively current. I don't know if that's good or bad. The first one occurred at Johns Hopkins University School of Medicine. A physician defrauded the university. This is an example of expense reimbursement fraud. This man has already pled guilty, but I'm not comfortable using people's names, so I'm just going to call him the fraudster, even though since he's admitted, I really could say his name. This man in 2017 pled guilty to federal mail charge fraud for illegally obtaining travel expense reimbursements from Johns Hopkins University School of Medicine. He admitted that between 2007 and 2015, he made misrepresentations and omissions in expense reports to get reimbursements to which he was not entitled. So he would declare family vacations on his expense report and meals that his family ate on vacation on his expense report. Sometimes he would seek reimbursement 2 or 3 times. Now, this is hard to catch. An example, he traveled to a conference in Japan. He got reimbursed from Johns Hopkins University School of Medicine, a French life sciences firm, and the Yale School of Medicine, where he had recently joined as chair of their Department of Diagnostic Radiology. We saw this a few years ago. Our public auditor in Kentucky did a rather large investigations of school systems and found many examples where superintendents or people in administration would go to Frankfurt, which is our state capital, for meetings. Wait for it for a minute. They would drive a school system car that they filled up at the school system gas tank where like the buses get their gas and stuff. Then they would turn in an expense report to the school system to be reimbursed at 50 something cents, a mile, like they had driven their own car. And then they would also turn in the expense report to the board on which they served in Frankfurt, the one they were going, some boards will reimburse your travel expenses. So in those cases, the superintendents were getting paid twice for driving a school system car. So back to this man and back to Johns Hopkins. The aggregate proceeds of this scheme was hundreds of thousands of dollars. His scheme was discovered during an extensive internal audit. I think that's pretty exciting that the internal auditors caught the fraud. And he was facing, when this was written, he was facing 20 years in prison. So this was investigated by the U.S. Attorney's Office, District of Maryland, and I think that's why the jail sentence would be so long. Have I made everyone afraid of expense reports yet? Okay. In 2020, San Diego Christian College agreed to pay $225,000 to resolve False Claims Act allegations. This is for allegedly violating a ban on incentive compensation. Have you guys already talked about incentive compensation today? Okay. The issue is that the U.S. Department of Education does not allow it. And it's Title IV of the Higher Education Act. If an institution receives federal student aid, it cannot compensate student recruiters with commission, bonus, or other incentive payments. The ban is intended to protect students against practices that serve recruiters, right? We're supposed to be looking out for the student's best interest, not the recruiter's best interest. And we're supposed to be thinking about the educational needs of the student. This investigation was led by the Office of Inspector General and the Department of Justice. The settlement amount was based on their ability to pay, not on the actual fraud. And that is the important word there is settlement or settlement amount. That's, you know, they got agreement and avoided future lengthy trial. What the school did is between 2014 and 2016, they hired a company called Joined Inc. So if you, hopefully no one out there is saying, oh gosh, I know that company. They hired this company to recruit students. And then what would happen is they would pay a portion of the tuition that the student paid to the company as like a kickback. This was detected via a whistleblower claim. And you want to guess who made the claim? Who was the whistleblower? I don't think you'll be able to guess. The co-owner of Joined. The co-owner of the company that was stealing whistle, you know, blew the whistle on it, and it gets better, was paid $33,000 for making the whistleblower, because you know that's what that whole act does. You can get money for making the claim. You get a part that the what you get is based on the ultimate settlement amount. So okay, Utah State University. This longtime Utah State University professor was arrested for allegedly stealing from the university. He was booked on May 1st of this year. He worked for over 30 years as a professor and extension wildlife specialist. Can't say that, for Utah State. On March 7th of this year, the university police received a report from the university's audit office. Again, auditors looking good. They had identified a series of fraudulent documents because he was trying to have some business expenses reimbursed. He had had almost $12,000 of false claims deposited to his bank account. Approximately 10,000 of this was 24 different trips. So these are not large dollar amounts. 24 different times he lied between May 7th of 2018 and January 5th of 2023. And this, again, he claimed he took his personal vehicle when he took the university vehicle. So, but he made, you know, $10,000 doing that. Over 4 years, he filled out per diem requests for additional meals that did not qualify for reimbursement. So, you know, an example of that would be, look at our guests here today, but like if we gave you lunch here and then you go back and ask your employer to give you, you know, lunch money because you went out to lunch or something. I think that's what people do. There were 10 instances where he stayed more days than was necessary in lodging and ran it through. But the very best, I think, is he charged the Airbnb that he stayed in when his daughter got married through to the company, and he manipulated the receipt. He altered the numbers of guests on the receipt. So yeah, there's no way. Okay, I'm going to pause here to give thanks to, I don't know if the thanks goes to Julia Ray or James Woods in our Lexington office. Who did the clip art on this, Julia? You both did this one? Okay. I love it. It's a little fraudster running around the world. And when you hear the story, you'll understand it. In this case, a former Southern University professor was sentenced to 24 months in federal prison for mail fraud and money laundering after living as a fugitive in Iran and Turkey for more than a decade. So in August of 22, a 70-year-old fraudster, which that seems kind of sad, doesn't it? A 70-year-old fraudster was sentenced to 24 months in federal prison and convicted for mail fraud and money laundering. This scheme, this theft had happened in 2008 and 2009. He was an associate professor at Southern University, and he tried to raise money for an unrelated business venture in Iran. He had a codependent, and the two of them worked together to submit fraudulent equipment quotes to the university with fictitious vendors. They would create fraudulent computer equipment purchase requests, purchase orders, and they would prepare fraudulent quotes in the name of shell companies and cause those documents to be approved and paid. They had set up private mail facilities in Las Vegas, Nevada, Beaverton, Oregon, and Baton Rouge, Louisiana, to collect these payments. So between April and November of 2008, so pretty relatively short period of time, the university issued 14 checks totaling $150,000 to the shell companies. So the co-defendant in this story pled guilty in 2010, and he fully served a sentence in prison and has paid restitution. Our little fraudster there running around the world was indicted in 2011, but he was in Iran at that point. He was living in Iran. So he lived in Iran and Turkey as a fugitive. A warrant had been issued in the United States for his arrest. In 21, he met with the FBI and agreed to return to the US and to face, punishment for his theft. This is one I told you guys at lunch we were going to talk about PPP money, and what we were discussing, those of us here in North Carolina today, we were remembering, I think probably every CPA back in, I guess it would have been the spring of 2020, when we read the federal government was going to be pushing out all of this money really quickly to individuals through tax incentive payments. What were those called? Were they tax incentive payments? Those like 1,800 and 1,200. What were they? No, the ones that individuals got. Well, like, yeah,
Like we got money for having kids. I don't know if everybody else
No,
got them, but
no,
I
and that's
was like, I got money for having kids.
that's another one. It's the ones like, that each taxpayer got, like, that one of them was 1,800.
Economic impact payment.
One was 1,800 and almost 1,200. We had several of them. And then the PPP money. So all this money was going out so quick that
Stimulus checks.
look at that. Did someone write that? Or
Yes, we got quite a few people in the chat shouting stimulus checks. So thank you, chat people.
chat people for covering me? Yes. We all worried that it was going out so quickly. And, the federal government said, when I started going back to conferences again, when COVID let me, federal government, every branch of the federal government said, we are going to dedicate money to going back and looking for fraud and if it occurred, and they are doing it. So in this case, this is a Fort Stewart soldier has been sentenced to prison for a prolific fraud scheme targeting COVID-19 relief programs and student loans. Now, this is a 39-year-old female, which I have to pause because I didn't share with you earlier. Fraudsters are normally men, so I always get excited when one is a woman. Makes me kind of proud. This woman was 39 years old, and she was sentenced to 42 months in prison. She pled guilty to conspiracy to commit an offense against the United States, and she was ordered to pay restitution of $3.7 million. So from August 17th to May 21, she led a conspiracy to fraudulently obtain PPP loans. And that would obviously be at the end of the time period. And she also secured fraudulent discharge of federal student loans by falsifying disability claims. So she submitted over 150 fraudulent PPP loans for herself and for others, totaling over $3 million. And so for the others, she obviously got a kickback for them. And then she, on the student loans, these numbers don't make sense to me, but it is what it is. I guess she worked for the U.S. Department of Veterans Affairs because she issued bogus disability certifications, so student loans were forgiven. But when I say the numbers don't make sense, they say it was over 12 student loans and it was totaling over $1 million. That seemed kind of high to me for 12 loans, but a lot of money. Okay. And then I have two more. I don't know if Julie's going to let me go through both of them. all right, I'll talk faster, but this one was pretty interesting to me because it reminds us that we need to be aware of every organization that our organization is associated with, even if we don't have a legal right to control them. In this example, TMU stands for Toronto Metropolitan University. The undergraduate student union in April of this year filed a lawsuit against 5 former executives, union executives. They alleged $900,000 worth of damages in just the 21-22 academic year. They alleged that the former student union president and several former executives were involved. They collected fees, the union did, of $2.95 million in student fees and about $750,000 from other revenue sources. The alleged abuses include $75,000 for Toronto Raptors tickets. I think that's hockey, right? And then it's basketball. Being from Kentucky, I should know basketball, right? Intended for student giveaways, but they didn't give them away. They kept them for themselves, or they sold them and kept the money. Also, payments ranging from $1,700 to $138,000 for things like business class flights for other individuals, and payments to third parties without board approval, payments for missing receipts, et cetera. What is interesting, is this student union had financial improprieties in 2018 and 2019, fired everybody, and then a couple of years later, it's all back. So obviously they didn't correct it. The university says we can't do anything about it. They have their separate bylaws, their separate legal entity, their own governance. But I think it's a mar on the university that this organization associated with them, has this. Okay. The last one that we'll go over quickly is a former University of Tennessee employee accused of wire fraud, allegedly accepted $70,000 in donations. This is in 2023. This man was a University of Tennessee employee and an alumni, and he worked for the College of Law fundraising. He basically diverted 2 checks. One had been payable to the University of Tennessee Foundation and one to the Tennessee College of Law, and he deposited them in separate mutual fund, separate investment accounts in his name. So it was just 2 checks, 2 donations, and he got caught. So that's the good news, but I think I'm slightly over on my time. So that's the bad news, but we have a 10-minute break, right, Julia? You can do an 8-minute break. You can do a 10-minute break. We'll see. You'll see. And Lisa Simpson from AICPA will be next, right? So that'll be great. So thank you all for being here.